following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by Ronald Dahl. Those who don't believe in magic will never find it. Market-wise, let's take a look at it out here. We have the Dow Industrials up 9, NASDAQ down 4, S&P's up 2, gold contract up $3.10, trading at $1,176 an ounce. Silver down 9, actually flat at $15.95 an ounce. Platinum up 5 at $1,107 an ounce. Copper up a penny and a half at $2.71 a pound. Light sweet crude up $1.84, trading at $59.97 a barrel. Bonds, we have the 10-year down 9 ticks, 125.02. 30-year is off a full point at 149.03. Both of those babies are in monster ABC structures on the way down. King dollar down 118 ticks at 95.20. The euro is flat at 112.79, and the yen is down 11 at 124.37. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You get a little deviance out here, no doubt, folks. So market-wise out here, you started the day down. You bounced all the way back. What you're going to see is you're going to see a flat market out here. Now, what we have is this. We've done 73 million shares. Yesterday we did 89 million. So you're doing short volume as you are coming into this lower swing point. What we haven't done, however, is whack that lower swing point yet, and that's 206.76. What I expect you're going to see out here, this market's going to flatten out. It's going to probably close in the negative, slightly in the negative. It's building cause, folks. It's building cause to get into it. So if you were a bull, what you wanted to see out here today, you wanted to see it get down to that level. Bottom line, didn't get to that level. You're a bear. Bottom line, you'll be building some cause right now in order to bust through that level. That's the way this market is set up right now. We go into the NDX 100. We take a look at the 3 Qs. 3 Qs, exact same setup. What you have with the 3 Qs. 3 Qs right now. We've done 21 million shares. Yesterday, you did 24 million. So the Qs are actually getting a little expansion of volume. I suspect we're going to do about 25 million coming into the close. Same type of setup, however, though. We're at 108.10. And the QQQs right now, that swing low out there is the, well, first off, it would have to go to 107.95. Bottom line, 105.95 is game to basically get tested. The Russell 2000, what do you have with the Russell 2000? Russell 2000 is trading out at a price point of 124.32. And, you know, the Russell bottom line wants higher price. You know, this is the pullback in the Russell right now is anemic volume. 19 million shares, you're down 50 cents, no big deal. Gold contract, what do we have with gold? What we have with gold is this, folks. Gold, they tried to whack it down last week, couldn't handle it. It's going against the March 19th day of strength. We need a sign of strength. That's the bottom line. There's no sellers, but guess what? There's no buyers also. So what you're going to be looking at inside the gold market is this, is that right now we're at this 1176.90 area. Anything inside the 1175 is saying, hey, guess what? That wants to run up to this 1232 area. Bonds are what's moving markets out here today now, folks. The bond market, if we take a look at the TLT is in the ABC structure on the way down. We're trading at 116.76. Bottom line, that little baby, it wants to go to 110. And let's go over to the S&Ps just for a second, because what you're going to see, this was an absolute classic out here today, folks. How the S&Ps traded, how the NASDAQ traded. Bottom line is that what we had is this: is that when we opened up this morning, you had you had a first bar that spiked higher. That spike higher was up at the 82 mark in the S&P. Then they took the S&P down to the 70 mark, bring it back up, and as it got back up, folks, the volume died in the vine. It got into ice. The volume died in the vine. If you bring this into a daily, what you're going to see is that the buyers are on strike. That's what you have going on out here, folks. The the S&P itself, the cash S&P, if we take a look at this cash S&P, as soon as we got under the price point of 2119, that sets up that you're going to go after that lowest swing low. The cash S&P today got down to a price point of 2072.14. That low that is out there that wants to get tested is 20.67. Some of the high volume stocks in this market, because it's still a low volume market coming into the swing. Southwest Air is down at $2. The airlines are getting absolutely smoked, folks. I mean, it's just pretty amazing. The airlines themselves are going to be down into the October 15th swing low that we've been talking about for quite a bit here. Probably, I'd say in the next couple weeks. The transports right now are only, this morning, the transports, let's just take a look at this. So the transports right now are at 82.84, and in order to get into the high of the swing low, we're talking about 81.69. So you're 120 points away from it. And the way the transports are trading right now, by the way, those babies not only want to get into it, it looks to me like they're building some cars to more than likely go into the bottom of that whole deal. And that's the airlines and the rails, okay? I can really understand the rails because of the oil, implosion here. The fracking deal, meaning that they're not taking oil out of the Midwest, they're not bringing fracking sand into the Midwest. That's a big deal. The airlines, bottom line, who knows why they're going so low? Maybe people are just fed up. But if we take a look at Delta, what you're going to see is this: these babies are coming down with a vengeance. They went up. When they went up, they went up really nice. Bottom line is that they're breaking lows, and they're breaking lows with huge volume. Delta in all of 3 days just went from 44 to 40 bucks. We have volume on the move on the way down. You take a look at this on the weekly basis, and it's making its way down to this October 15th swing point. The October 15th swing point is a great benchmark if you're looking at your portfolio as to, okay, what do you have there? How far is it away from where your stocks are trading? Because that's where we're going. That on Delta Airlines hit 38.97 today. The high of that October 15th swing low is 35.14. We're going to see it. It will make its way down into that level. We go take a look at the Dow stocks, some of the Dow stocks out here. Let's take a look at what's moving things around. So inside the Dow, this is what you have. The strength, Procter & Gamble is number one. Procter & Gamble, folks, is a wicked dead cat bounce. Procter & Gamble is up $1.37 today. We're trading at $79. That's down from $95. Okay, that is an extraordinary, dead cat bounce. It's not an extraordinary. There's nothing to it. If we go take a look at Caterpillar second, that's up 50 cents. American Express is up 44. Intel is up 15. Taking it south is that you get Walt Disney down 73. Big Mac is off 57. Home Depot's down 42. And Boeing is down 50 cents. Inside the NDX 100, what do we have inside the NDX 100? Bringing it higher, even though the index is down right now, is Netflix. That's up $18.84. Illumina is up $4.78. You get Intuitive Surgical up $7.68, and you have Walgreens up 99 cents. Taken away. On the way down, what do you have? Micron. Micron's down 70 cents at 25.22. Akamai's down $1.98. Citrix is down 162, and you got Discovery Communications off 47 cents. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. And the world's in the markets, folks. I expect what you're going to see out here. This baby is going to flatten out, and we're just going to be building cars. Now, what's going to be really dangerous for the market is this. We're on Tuesday. Tuesday, Wednesday, and Thursday in the summer, that's when you can get volume going inside the market in the summer. Realistically, also, on a flat market here today, Wednesday and Thursday, it's going to go after that swing low. The real question is, as it goes after that swing low, is it going to have the volume to take that baby out? Dow Industrials right now are up 4, Nasdaq's down 5, S&Ps are up $1.50. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of these markets, folks, this is what you have happening. As we come into this close, I expect what you're going to see is just a little bit of pressure, nothing heavy. But this market right now, this wants to get it back to flat. Right now, we're trading at a price point of 2079. And your future S&P, I suspect we're going to be finishing out somewhere about 2075. Where I'm going with that 2075, that's where there was a little upthrust this morning at 10 a.m. You know, so I expect that's what you're going to have. Now, folks, let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. Don't forget, folks, Basil has an outstanding show right here at TFNN every trading day, 11 to 12 Eastern Standard Time. You can give him a call. He'll answer your questions each and every day. He also has a great newsletter. Now, the way you get the newsletter, you come over to our website at TFNN. You go to newsletters. You go to trading newsletters. You see the opening call right there. You can test drive it 30 days absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day?
Yes, thank you.
Cool, man. So what are we going to look at today?
Well, we're looking at the Dow, as we always do. And I've been discussing with you as we've had these conversations that my suspicion was that for the past couple of months that we've been in some kind of a mini recession. If you look at many of the important stocks that are talking about the types of goods that are sold, if you're talking about even the autos, you know, they had great sales, but if you look at the prices of the auto companies, they're pulling back very sharply. So what I discussed with you was, in the patterns that I look at, there was a series of highs that were made in the Dow, and from the last high that was made at 18,288 on the 2nd of March, there was a move down from that level that took us to 17,579 on the 26th of March. Then there was a rally to an all-time high, a nominal new high, just 70 points high at 18,351 on the 19th of May. And ever since then, the pattern that we've seen is that the 9-period exponential moving average, a little difficult to see, but there's a maroon line right there.
Yes.
Became, instead of support, it became resistance. I'd also discussed with you the last time we met that I had a pattern that I was looking at as a potential chart formation that could be a template for price to come. And that was that the distance, the angle and the distance that was formed from the high of early May to the low of late May could be resembled in a move down right now. And in fact, there's that orange line that you can see, a parallel line. And if the price time match works out, then we should be making a test of 17,570s round about the 16th of the month. So we've got a couple of days to go. But most importantly, I'd also drawn in this trend line. I call this, I'm going to make it a little thicker so that we can see it a little bit better. Right there. I'd call that line Chapman Wave Inside Wedge, which becomes both a target line, the way I measure it. It also becomes a support line. And look how many times the Dow's come back, hit that line, went either sideways or tried to rally. Even today, went right to that line, and now it's making, well, it depends on where we close. The Dow's now down a fraction. But if we close with this doji candle, what I'd said to subscribers, if we're looking at measured moves, sometimes a doji, the classic way of looking at it is the doji could either be a halfway marker or it could be a reversal point. So if you look at the high that was made with the doji top back in mid-May, and you look at this candle, I think it was June the 2nd. Yes, June the 2nd, you've got almost a measured move from that little doji down to there. So at this point, I expected that today there'd be some kind of a rally. What would be very disappointing to the market to really demonstrate what my weekly chart has been showing, because on Friday with the close, we went to a sell signal, not a sell mode yet, but a sell signal,
okay.
which means we're starting incrementally with these lower lows and lower highs to see a trend change. I call it the tide. To see the tide turning, and it looks to me, based on the way the MACD and the daily and the stochastic, which I can't show you right now because it's just being covered. I'll do it on this chart here, INDU. The stochastic, I said to my subscribers when it was in the 50% area, I said our target is to see it go into the teens and then into the single digits, and then there should be a pretty nice bounce. So here we are. Yesterday was in the teens, today it's in the single digits at 7.60. And I'm looking at it to say, well, there's a chance that we could, based on the 120-minute chart, have a little bit of a bounce. But most importantly, when you look at the weekly chart, I always talk about the market being, there are only three patterns. There's a single line move, either straight up or straight down, or there's an arch formation, which also could be an inverted V, but it's the same kind of pattern, or a cup or a V-shaped pattern. So you've got those three patterns, and what we've got here is a very large arch formation after a little cup double top, and I've circled where I think that we're going to go as a test. So this trend line, which has been very important, is becoming even more important. So I've been saying for quite a while that for me, in the longer term, that longer term meaning about an intermediate term, talking rather months rather than days, this is very important because, look, the MACD and stochastic and the weekly chart are failing, and you've got the Dow making this arch formation. So it says to me that there's a real good chance that we've started the trend to the downside, and we can expect lower lows and lower highs. And we're seeing that actually in almost all the indices. And if you look at the Qs, which we're holding very well, look at this. The QQQ has made the same pattern in the daily. And now we've got to watch it real closely because in the weekly chart, you're looking at a close that's possible below the 9-period moving average. If it happens this time with the technicals already very weak, that's not giving you very much support. So we've been very cautious from my opening call for my subscribers. We've been adding to the short positions. We do have long positions, but basically we're looking more and more at short positions. And we're waiting. Regeneron is a stock that's waiting today. I wondered why there wasn't any price on the stock. It got halted. And
really?
Yeah, it got halted, and it's actually, I did a report on it this morning, not knowing anything about it, saying this is leg F in the daily at 544 round number high. That was at the close yesterday. The weekly is in leg F, and the monthly could be in leg F. I call that a potential hat trick top, and the 120-minute chart has made a peak E. And that would suggest if whatever they do fantastic work. These biotech companies are terrific. But it is overbought in any way one reads it. So if Regeneron, instead of breaking 544 on whatever the news is, and I suspect they will get approval, if it starts to fall, it could start to impact the IBB, because the IBB was sinking very dramatically the other day when all of a sudden Regeneron came out. It was up 14 or 20 points or something like that, and it pushed the IBB up. That was the only stock that did it. So I'm suspecting that the iShares of the NASDAQ is going to be very important, because if it starts to come down, you've lost your one key sector that's been giving support to the market. So, and Apple, actually, I don't think Apple's acting very well at all. It's in a sideways trading range, but I just don't think it's going to make a new high, at least for the near-term future.
Yeah, it's really going to be interesting. So what you're going to have here, folks, this is pretty wild, man. Because so Regeneron is what in that in the IBB. They'll announce it after the close whether they got the go ahead
approval.
So that's going to throw a spike either way into the NDX 100.
I think it could, yes.
Oh yeah, no doubt. Basil, thank you so much. You have a great night and safe night. We look forward to the show tomorrow.
Thank you, Tom. You too.
Stay right there, folks. Coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. We have the Dow down 15, Nasdaq's off 11, S&Ps are off 1. Let's take a look at some of the Dow stocks out here. This is what you have happening inside the Dow stocks. You got Honeywell up 19, GM is up 20. We get American Express up 33. Oxy is down 32. You have 3M up 42. Procter & Gamble is up $1.20. Procter & Gamble, that's just a dead cat bounce. Walmart just still can't get any traction. That's down 19 at 72.42. And when we do take a look at the airlines are an absolute mess. UNP, let's go over and take a look at some of the rails. We take a look at the United Pacific first. What you're going to see with the United Pacific is this. United Pacific, the high for the year, folks, is 124. 96 is the low. Right now, you're trading at 99.54. And this little baby just, you talk about a straight move down. This is pretty amazing. I mean, 123 down to this level. What we're doing today is that we're actually breaking another low. Let's bring this back, and we'll put this on a weekly for a second. Take a look at this on a weekly. Okay. Oh, man. Oh, check this out. Okay, this is a heads up. So the October 15th swing point that we've been talking about, folks, UNP just got to it. So the high of that is 106.97. That had already gone into that 4 weeks ago, and it went into it with volume, by the way. Now what we've done is that the low of that level is 96.17, and we're at 99.47. So your probability is much higher that it's going to go to the bottom of it. What you're going to be able to get out of this, and this is really huge, how this hits this baby is going to say a huge amount, probability-wise, to tell us how the market is going to react, meaning the S&P is going to react as it comes down into that lower price. This is a big heads up, folks. Let me see UNP. I want to see how many others have actually got into this, meaning inside that rail structure. CSX. Let's see CSX. Let's see where CSX is in correlation to this. CSX. Okay, so CSX right now is trading at 33.33. Okay, that hasn't even reached the top of it yet. So it's right at it. 32.33 is the top of it. The bottom of it is 29. Bottom line is that the rails look to me like they're going to be the first ones down there, no doubt. Oh, Kansas City. Let's see what Kansas City looks like. KSU. So we take a look at KSU. The KSU is trading out at a price point of 92.97. KSU. She's down from 125. Wow, what a trip. Where the heck is this? Yeah, she's already blown this away. KSU is actually going after, let me pull this back a little bit further. Well, weekly's good enough. But you'll see what's happening with KSU. This is a big problem with KSU. The way KSU is trading, folks, okay, is that this is trading where it was trading in January of 2013 right now. And we're, of course, in June of 2015. She's going to go after $88. And if she breaks $88 with volume, it's curtains, meaning that would bring that down to about $65. So there's some real juice downtown in this baby in an extraordinary way too, not in a small way. So it's a major heads up that where we are going here. Let me see this thing. Close this. Working on this. Yeah, bottom line is that we bring up the full transports, TRAN, and what you're going to see inside the transports is that the transports right now, yeah, the transports are banging on the lows, and they're banging on these lows with some real volume. This is on a weekly basis. So check this out. The transports for 3 weeks in a row have been banging on the low of 82.65 on the weekly basis. That's setting up that, number one, it wants to get into at least the high of that area. You know, we'll see how it shakes out coming into the high and the low of that area. But the way that is set up right now, that baby is saying that, guess what, we're going to come down there. The real key is going to be, okay, as we get down there, do we get the volume to take it out? As we come into the close out here, let's go take a look at the NQs for a second. The NASDAQ composite, NASDAQ, we just came down intraday into the first little splurge that we had topside this morning, and I suspect that these markets are going to basically close out just about flat. That's the way this market, these markets are set up right now. The NQs right now are at 44.24, and as soon as they went back under the 44.28, that was the spike from this morning. That's saying that there's just going to be more down pressure on this market, because what the market did do is that as the market went topside into 1250, you know, you got some buyers that come in here. Those buyers right now are going to be trapped coming into the close. And when you see something like that happens at the trap coming into the close, what normally happens is that puts more selling pressure coming into the close. The reason that would put more selling pressure coming into the close is because there's many folks out there that want to go home flat. That's how this whole thing shakes out. What I do expect you're going to see is you're going to see a couple little blurps up. If we go over to Apple, Apple on a subtle basis today has been pushing around the NDX 100. Not too heavy, but in a subtle basis that it has. Because Apple was lower today, you know, got down to 125.62, moved up to the 120.28 area. That puts juice inside that baby. And, of course, inside the NDX 100, the IBB is the number out there. Now, what's going to get really interesting is that there's going to be bets that are placed out here, REGN, and the bets will be placed on the 3 Qs. They won't be, I don't think they're going to be placed on Regeneron, but they'll be based on the 3 Qs that they got what they needed out of it. And I suspect what those bets are going to be, they'd be positive bets. You know, that would make sense they're positive bets, because Regeneron yesterday went from 516 to 539 with volume. Before it got stopped today, you're to a higher high with volume. So it's like, okay, you know, they're coming across. I believe the drug is for, let's see, it's a cholesterol drug. It's a cholesterol drug that isn't a statin, I believe. Amgen, a cholesterol reducing drug, will face questions from users. Oh, this is Amgen. Okay, hold it. I believe that it is some kind of cholesterol drug, though, that they're both going after. That is not a statin. And so, you know, all these drugs, man, oh man, just pill upon pill, pretty crazy. If we go take a look at the European markets out here, folks, European markets, you know, came back today but didn't hold. You had the DAX down 63, that's at 11,001. That also wants lower price, and you had some volume come in the DAX. We did 98 million shares. That doesn't sound like a lot, but that's a lot for the DAX. The FTSE in the UK, we take a look at the FTSE in the UK. That went to a lower low, down 36 bucks. The FTSE in the UK right now is trading at 67.53. That's on its way down to the 67 mark. Over in Shanghai, Shanghai just continues higher, folks, okay? If you saw that story today, you can actually Google the story. It's a good story to Google. On CNBC, they had one of their reporters go out in the field, and it was a village of 1,000 people, and it was 3 hours away from a major city, all farmers, and it was just wild watching it. They had a whole trading room set up, and they were all watching their stocks, you know, with a beautiful Samsung TV in the middle of nowhere. What does that say? That says that, you know, bottom line is that sounded like the United States in 1998, 1999 specifically. So I think the Shanghai looks like it wants to go another 1,000 points higher. But man, oh man, they're asking some of these people about, you know, losses versus gains, and they've never seen. This is a recent phenomenon that they've all got in the marketplace, meaning recent, the last you know, six months, a year. So they never have seen the Shanghai, how it can get taken apart. Because the Shanghai got taken apart, folks, exactly like NASDAQ got taken apart. In fact, if I bring it up for you right now, when you see this, you know, now this is off the 2007 numbers, but the bottom line is that this is how the Shanghai loves to trade. When that's on a trend, man, that's on a trend in an extraordinary way, either up or down. and what the Shanghai has done, okay, and this is in 3 months. So the Shanghai has gone from 3,100 and April, May, June, yeah, exactly 3 months, 90 days, from 3,300 to 5,100. Amazing. You stay right there, folks. Come right back. Dow is down 10, Nasdaq's off 9, S&P's are flat. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the markets, folks, let's take a look at them, see what we have happening here. The, there she is, 1 second. Okay, so Dow Industrials right now, you have up $4. We have the NASDAQ down 5. S&Ps are up 1. The Qs, the NQs are down 4.5, and what I expect you're going to see out here, folks, we're going to come right in with a flat market. That's the way this thing is shaking out right now. And what you're going to have, though, is this baby is building cause, and it's building cause to get into lower price. So this is going to be wild watching this whole thing shake out, because what you definitely have at this particular point is that there it is. You have the T's that the market tries to make it back to positive, can't handle it. The SPY right now is trading out at 208.61. The low there, it was 206.76. It couldn't get into that low, the 76 low, and what that sets up, by the way, okay, the 206.76 number. What that's setting up, that is a 135 million shares. Right now, we're going to do about the same amount we did yesterday, but we didn't get to the swing low. The swing low points, folks, where markets talk, walk, and squawk, okay? So what you can expect out here is that you're going to be building more cause to get into that level. Now, if we didn't end right here, if we ended at the highs of the day, it would have been a different ball game. But this market, when it went up intraday, could not handle the down thrust that had come into the marketplace on the 8th. That's what's stopping this market dead in its tracks. You know, on the 8th when we were coming down, and that in itself is, you know, that market didn't come down that hard. So that all that is showing is that there's no sellers, there's no buyers rather, and as those buyers are walking in, the buyers that are walking in, the selling is overtaking them. And there's not a huge amount of selling yet either. But what you're going to see out here is that, let's go into the Qs, because what you have out here is that we have harmony right across all the indices. The Qs right now are at 108.14. They got down to 107.20. That swing point is 105.99. You know, so you're going to see a lot more pressure on the way down. What is going to be really interesting is the Regeneron. Where is that going to go? Because what you do have is this. The biotechs, folks, the biotechs have not come off the high. The biotechs themselves are what runs the composite, not the NDX 100, but inside the composite, they're a big factor inside the NASDAQ composite. There are a factor inside the NDX 100. I suspect as soon as the market's closed, now what they'll probably do, they'll probably wait for this announcement until actually the futures are closed. But if they don't, then you can get a real shot on everything here, because what you'll see, and I've seen this happen before, that just because the stock market's closed, they hit it at 4 o'clock, the Qs are still trading, the NQs are still trading, the S&Ps are still trading. You know, we'll see where this shakes out. But the way Regeneron has traded, that'd say to me that this thing's going to get popped higher, you know. So we'll see. And it doesn't say when you actually look at this trading. So it stopped at 07.05. The real key is going to be, they haven't said yet when this is going to be released. Now, Okay, so what I do expect you'll see, though, more than likely, if the meeting's still going on, it won't be released until after the meeting. They haven't said there if, in fact, the meeting is on or it is off at this particular point. If we take a look at the IBB, because it's going to, the Regeneron basically has been keeping up the IBB because your two higher stocks in it, meaning Amgen and Biogen, they're both down. The IBB is trading at the 360. Now, what could be really cool here is this, is that IBB has a high volume spike at 374. And you know what? That's right where it might spike to. You get up there at 374. If you get that test on lighter volume, there's the field day. Because the IBB wants lower price. It's been consolidating since March 4th. It has three high volume lows at the highs. It has high volume lows at 333. That was established on March 26th. April 1st, 334. And on April 30th, 330. So this is going to push a lot of indices around. It's going to push a lot of volatility into the marketplace. Walmart continues into lower price. That's a real problem. Procter & Gamble. Let's go look at Procter & Gamble. That got a bounce out here today. Not a sign of strength, however. It didn't have the volume into it. We hit lows yesterday with 10 million shares. You're doing 9.3 million shares today. We put this on a weekly basis, and what you're going to see, it's about time that it got some support. It's getting some support from, let's see, a couple years ago. Wow. So Procter & Gamble is trading where it was trading in February of 2013. That's the way that is set up right now. So this will take a bit on Procter & Gamble to break down to lower levels, because what you have is that Procter & Gamble had traded from February of 2013 all the way to August of 2014 at these levels. So that's a decent floor. It makes sense. You're going to get a bounce out of it. The bounce on Procter & Gamble, you're at 78 there. That can get into 81. Where I'm going with the 81 is that that's where the spike was in March of this year, the week of March 20th to be exact. And if that spikes into that level and you have lighter volume, what it's just done is set up a very large ABC structure on the way down. The next leg would take it down to 60.98. So there's a lot of action inside the marketplace, folks. The amount of equities that are trading down and period, intraday, okay? And on the daily, weekly, 260s, all of the above are pretty incredible right now. There's some big numbers as they're trading down into lower prices. The volume characteristic coming into these swing lows is going to be absolutely crucial. There's no doubt about it. But when you do take a look at that SPY, and this is the thing I want to hammer home, because you don't want to be in the SPY, folks, when this thing goes after its October swing lows. That's the bottom line. That October swing low, when you put up the SPY on a monthly basis, it's about as beautiful as you can get. Bottom line, you're 208. That top of the October level is 201. That's on a monthly. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow up 4, NASDAQ down 5, S&P's up $1.50. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's Gold Report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Excuse me, folks. Hope everyone's having a great day, safe day. Let's make it a great night. This is a quote by Richard Bach. To bring anything into your life, imagine that it's already there. This is a beauty, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 2, NASDAQ down 7, S&P's flat, market's flat. That's the bottom line. Gold contract up $2.40, trading at $1,176 an ounce. Silver flat at $15.92. Platinum up $4.85, trading at $1,107 an ounce. Copper up $0.015 at $2.71 a pound. Light sweet crude up $1.79 at $59.93 a barrel. Bonds, we had the 10-year down 12 ticks, 124.31. 30-year off a full point and 8 ticks, 148.25. King dollar down 133 ticks, trading at 95.19. The euro flat at 112.79. The yen is at 124. Our phone number is 877-927-6648. Give us a call, folks. One that's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so check it out, folks. This market is deviant. No two ways about it. So S&P right now, if we use the SPY first, what you're going to see is this. The SPY's trading at 208.45. We did 97 million shares, so we did have an expansion of volume yesterday in the ETF structure. We also, by the way, and I'll go through this, we had an expansion of volume in the marketplace. So what we did out here today is this, is that we got to a lower low, we had an expansion of volume, and so what does that do? That brings the probability much higher that you're going to go after the lowest swing point right now, and that's what I suspect we're going to do. Inside the SPY, the swing point that we're talking about is the May 6th swing low. That swing low is 206.76. Right now, we're at 208.45. Bottom line, I suspect tomorrow morning, we're going to go after it. The volume characteristic there is pretty, it's big. It's 135. We only did 97 today. So we'll see if we get into that with volume or not. The Qs, the NDX 100, same setup inside the NDX 100. You have harmony across the board out here today, too, by the way, folks. NDX 100, what did that baby do today? That goes down 18 cents. Not that that's a lot. It's not a lot. Bottom line, though, also had an expansion of volume. We did 26 million shares today, 24 yesterday. Now, NDX is also going to need a lot more volume to break this swing low. The swing low we're talking about is also the May 6th swing low. That number is 106 even, and right now we're at 108.01. We went to 107.20. I suspect it's going to run down to that number. That number at that swing low, folks, is 42 million. So that is also going to need a very large expansion of volume in order to be a valid break downtown. We go and take a look at the gold market. What do we have with gold? Bottom line, we need buyers in gold. We don't have sellers. They can't whack it down, but guess what? Simultaneously, bottom line is that we need wide price spread, accelerated volume. Right now, we're trading at 11.75. What the gold market has done is this. Now, this is the cool part, folks. Gold came, well, first off, gold has been building cause for more than 3 months. It's actually been building cause since December. We've had higher lows since December. The higher lows since March. Yeah, higher lows since March. And the equity market has been higher lows since December, which is pretty cool. But the metals market was higher lows since March. You're backing into the March 19th sign of strength, and you're doing that with dramatically lighter volume. That's what we had done on Friday. It couldn't break it down. If you take a look at the GLD and you want to see how this correlation shakes out, because I know most of you absolutely have the equity volumes, what you'll see is this, is that when the GLD came down on the daily, it came down with 5.5 million. That was last Friday. It was going into 12.4 million. So it was 5.5 versus 12. That's on the daily. If you put this on the weekly and you want to see some harmony come in place, we came down on the weekly with 28 million versus 39 million. Okay, so each one of those, statistically basically is saying it wants to go higher. What we also had done is this, and this is what's pretty cool, is that when you take a look, the low that was made in November in the GLD, that low was made at 109.67. We did that with 44 million. Then we tested it with 39 million. Last week we tested it with 28 million. So your correlation is 28 million, 39 million, 44 million. You can see that you don't have sellers there. Now, that's the first part. Second part's more important. And what it is that when we went topside in January, we have juice up there in January. So, yeah, January. When we went topside up to 125, that was volume 125. That was also a valid break of the downtrend that started at 1330, and we haven't negated that yet. So the way that is set up is that sets up now the GLD wants to go to 125, which is 1250 inside the gold market, and it also wants to get up to this 132, which would be the 1330 inside the gold market. So it's going to be pretty neat watching this whole thing shake out. Oil. Let's go take a look at the oil market. We have an oil market out here trading out at, let me put this on a daily for a second. Oil market is trading out at 59.89. We did volume out here today of 341,000 contracts. That wants to go hit the last swing high, you know, so we'll see how it hits it. It's going to need a little more volume, but we have that doji that's hanging up here from the May 6th area. The low of that is 61.62. We're right next to it right now. Wants to go hit it. We'll see whether it can get up and over it, and if it does get up and over it, then you're going to see some action. My take is that you probably, boy, that's a. I guess we got to wait till we get there because this is a close call. See, what it is this. So check this out. Oil also had a sign of strength on June 1st, and it didn't move. But I always like that when you have a high volume day, and you're pushing into a swing point. In this case, the high volume day that we had on June 1st, we were pushing into the into the May 6th swing area. Your probability gets much higher that you're actually going to bust that. And this is subtle. When they do these, they're really subtle. And then the second part would be even yesterday. Yesterday, you know, we didn't go to a lower low. We did nice volume in there. And bottom line is that subtlety makes a huge difference as to how markets react and where they want to go. Bonds, when we talk the bond market, you're talking history, folks. Bottom line, you want to refinance your house, you're buying a house, go do it, okay? 10-year right now is at 2.4. That's going to give you about a 4.30 or 4%. 30-year. Bottom line is that I expect you're going to see that 10-year. This isn't a large ABC structure on the way down. The 10, the 20, the 5, the 30, they're all in ABC structures on the way down. That's going to generate lower price, high yield. The TLT, which is the 20-year plus bond fund, is trading at 116.54. That wants to run down to that 110 level. If in fact that's what we get, just so you can really wrap your head around this, so you can give yourself some correlation of time, the 110 level, that's where we were trading in September of 2014. So it's not the end of the world, but that's a long time ago. And you know, once this thing gets rolling, I suspect what we're going to have is this: the Feds themselves more than likely won't hike the rates. The market looks like it's going to hike the rates first. In fact, the way the market is trading right now, it looks like the bonds are throwing the torch on the stock market. That's how this market's actually trading. If we go take a look at the King Dollar, and here's where we have some divergence. You have rates that are going up, which normally would say that, okay, rates going up makes stronger currency. Well, guess what? Inside the dollar, it's not there. The dollar is an ABC structure on the way down. The dollar had done a counter-trend bounce last Friday, went up 1,600 ticks. Guess what? That's wiped out. Right now, we hit a low today of 94.86, 94.67. We're only 200 ticks. You know, 1/5 of a penny away from the swing low of 94.76. And the volume's low there. I suspect tomorrow it's going to go after it with a vengeance. You stay right there, folks. We'll come right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finished down 2, NASDAQ down 7, S&Ps were flat. And as we do each and every Tuesday, folks, at 20 past the second hour, we have our man, Mr. Andy Hecht. And don't forget, folks, Andy has an outstanding show right here at TFNN every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Get that show right on your cell phone, TFNN.mobi. He also has a great newsletter. It's the Technomento Commodity Report. You can test drive it 30 days, absolutely free. Go to our website at TFNN. You go to newsletters, trading newsletters. You see the Technomento Commodity Report right there. You can test drive it, get some good trades. Andy Hecht, what's going on?
Hey, Tom, how are you?
I'm doing great, man. You having a good day?
I'm doing great. And we have a really special show tonight following your show.
Oh, good.
We have a guest for the full hour, Mr. Sal Gilberti, who is the developer and founder and president and chairman of Tucrium, which is the family of funds that has the grain ETFs.
That's corn, right. The wheat. Corn.
Yeah, corn.
The symbol corn, C-O-R-N.
That's it, corn, S-O-Y-B, which is the soybean one, cane, C-A-N-E, which is the sugar one, and wheat, W-E-A-T. And we're going to be talking with Sal during the hour about all kinds of things. I mean, we're going to be talking to him about his ETFs, of course, about the agricultural markets in general, El Nino, the Chinese. He's got a lot of thoughts about gold versus grains, and he's going to give some advice on people who are trading ETFs and ETNs. So it should be great.
That's huge, man. So you stay right there, folks, 5 to 6 tonight. Well, you know what's interesting, too, is that, you know, I mean, these grains, you know, wheat came off that bottom. I mean, as we were talking the last time, it looks like, you know, there's the metals can't go anywhere, but the grains are.
Well, the grains have gone so far down, and I've been writing a lot of stuff in Seeking Alphas. As you've probably seen, you know, a lot of stuff on the grains, and I want to go against the grain here and belong the grains because they have another bumper crop priced into them this year, and hey, nothing is given. So the downside is limited in these markets, and the upside's always potentially explosive because of weather and Mother Nature.
Yeah, there's nothing like Mother Nature in the commodity market, right?
No, she can be very brutal at times.
Well, you know, it's
if you're
wild.
on the wrong side.
And it's wild. I mean, and I'm sure you know this better than most, is that there's a huge amount of money that's spent by these funds, right? These large funds, I mean, to be out in the field, right? You know,
yes.
to do the surveillance in the field, to say, okay, what do we have here, right? What, you know, I mean, I don't know the terminology, but I mean, they look inside the corn, the husk, the whole bit, right?
Oh, they're looking at everything. I mean, in all the commodity markets. But you know what? If you look at open interest, they're still short these markets here because the trend is certainly lower, and nothing ignites a rally like shorts. So I'm kind of liking this market. I think there's a very limited downside and a lot of upside, and I think we'll learn a lot from speaking to Sal during the hour between 5 and 6 tonight. But before we get there, let's talk a little bit about energy today, Tom, because that's really interesting.
Yeah, it is. I almost went short oil this morning. I'm glad I didn't. I kept looking at it. And
it's a tough one, man.
No, I'm not going to short it yet. You should have seen, folks. This is like 6:30 this morning, and I'm sitting there, and I'm watching it, and I'm watching a trade, and I'm saying to myself, you know what? That spike high up there wants to get tested, and I'm glad I didn't hit it, man.
Oh, it's good you didn't. I'll tell you, the OPEC meeting was exactly the same as it was back in November, exactly the same outcome, but the price is much lower now, and the reaction to me is very positive. You know, term structure has come in, the contango has come down, product prices are booming. Look, you have oil up $2 today, Tom.
Yeah.
But you have gasoline up 6.5 cents here. So the crack spreads are very strong. You have heating oil up almost 6 cents here. So the product demand is telling us that these are good prices for oil. That, you know, these are not overbought prices. So we have to be very careful here. And I think that oil's gonna drift up to the $65 level.
You know what's cool, folks? Andy, when you just brought this up, oh, this is going to be cool, man. Hold it. I might be going long oil quickly. So what's going on, if you bring up this gasoline.
Oh, yeah.
Okay, so let me put this over here.
I'm going to put a chart up there on gasoline. So
Wait till you see this, man. Okay,
that's a beautiful thing.
The same spike high in oil, folks, was May 6th. That number in gasoline is 206.39. The volume was 32,000 contracts. Well, guess what? We're coming in with 37,000. You know what's going to be cool here is that if you get that taken out with volume, you can just jump on the other contract, because this is a big ABC.
Yes, and it's also happening at the best seasonal time. We're right in the middle of driving season here, so demand is going to be good. And hey, anyone who fills up their tank with gas this year, even though we're up at 207, last year It was $3.10 wholesale, so it's still 30% cheaper this year.
Yeah, no doubt. And you know, this gasoline is set up for $2.30.
Yes, and $2.30 is $65 oil.
Yeah.
So, you know, I think it's looking good. And the other one today is natural gas.
Yeah, that had some action.
And let me tell you something, Tom. Last week, bearish news everywhere. First of all, you had the EIA who came out with a bigger than expected injection into inventories. Plus, the 5-year average went over. So, in other words, we were always kind of inventories were below the 5-year average until last week.
Yeah.
And now they're finally over. Two bearish things. And the EPA said, hey, fracking is not bad for the water supply. So this is a plethora of bearish information for natural gas. And of course, what does natural gas do? Well, it sucked in some new shorts and decided to rally. We were up yesterday and we're up today. We're up 20 cents or so in 2 sessions.
That, folks, is $2,000.
Just to put a number on it.
Yeah, it's amazing. And you have the wide price spread. You got the volume behind the move. You know, 310, here you come. 302, 310.
I actually think, Tom, this market has to close these gaps. It has to fill the gaps on the charts. There are gaps to fill before it sleeps.
I like it. I like it.
That's an article I'll write next weekend.
Oh,
hey,
I
heard you talking about the airlines.
Yeah.
I got an article. I'll post my articles here if I can.
And folks, you can always get Andy's articles. Just hunt Andy Hecht, Seeking Alpha.
Right.
Those babies will come right up.
I put the wrong one up here, but I'll put it up after I get off. I wrote an article about the airline stocks today, basically excoriating the 3 majors, United, Delta, and American Airlines. And what I said in the article,
I know excoriating must mean something bad, but tell me what it means.
These guys made money by accident.
Okay.
They made money by accident. What happened? Oil dropped from $107 a barrel to $42 a barrel.
Right.
These guys, jet fuel dropped through the ground with the oil. These guys didn't lower their ticket prices. Of course, they're going to make a lot of money.
Right.
They made a lot of money from October through January, and not by their own design. And now the chairman of Delta, Anderson, is going after Congress and the administration because of unfair business practices by Persian Airlines. If I could stay after the break,
absolutely.
we can talk about that.
Stay right there.
Okay.
Andy Hecht, Tom O'Brien. And don't forget, folks, Andy has a great guest coming up right after the program, 5 to 6 tonight. So you stay right here. Dow right now is down 2, Nasdaq's up 7, S&Ps are flat. Look at them right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. We're talking with our man, Mr. Andy Heck, and we are talking commodities. Andy's got a great guest coming on, folks, 5 to 6 tonight, so you stay right there. So
we're talking airlines for a minute.
Yes.
So I wrote this article on the airlines, and I put a commodity twist on everything because that's my business.
Sure.
And as I said before the break, these major airlines, United, Delta, American Airlines, they made money by mistake. The price of oil dosed. They didn't lower their ticket prices, so of course their margins went up. In
an amazing way, because that's one of their highest cost structures, right?
Exactly. I mean, that is the bottom line.
Right.
When you're running an airline, it's all about the jet fuel.
Right.
So now that oil prices are going up and product prices are going up actually faster than crude oil.
Yeah.
All right. So they're not doing as well. So I saw last week that Richard Anderson, the CEO of Delta. Right. He came out and he started talking about the fact that these Persian airlines, Qatar, the United Arab Emirates airline, Emirates, which is, by the way, the biggest airline in the world these days.
I know.
And Etihad, these three airlines have unfair competition because they're supported by their governments. They get all kinds of subsidies. When their fuel hedges go bad, the government pays for their fuel hedges. Okay, all wonderful stuff. So he wants to go to Congress and the Obama administration, and he wants to limit their ability to land in the U.S., freeze, no new flights. And I'm like, oh my God, this industry, especially these majors, have been supported by the U.S. government for as long as I've been alive, number one. Number two, they have all kinds of, they've been accused of all kinds of pricing things against the minor airlines, against the JetBlues, the Southwest, all kinds of unfair competition. And I'm laughing. So I wrote an article basically saying, hey guys, these stocks doubled between October and January, and they're off the highs now. But there's a lot of downside room because these companies are mismanaged. There is no question, and the airlines, the major airlines, can't help themselves but losing money. If the oil didn't come down so fast, they would have found a way to lose money in low oil, but they couldn't do it because it happened so fast. Anyway, that's what the article's about. It's listen, I hate that sector here. I love companies like JetBlue, Ryanair, the discount airlines. And by the way, JetBlue is doing all kinds of, instead of complaining to the U.S. government, they're doing all kinds of partnership agreements with the Emirates Airlines and stuff to get their U.S. routes. So who's the smart ones there? JetBlue or Delta, United, and
oh yeah, there's no doubt. And listen, the airlines folks have been ripping us off forever. They could care less. I mean, that's just one of those deals that over the course of I think so many years, everyone's fed up with them, man. I mean, that's what it comes down to. And as customers, guess what? There's other alternatives, and I think some of the other alternatives are not going anywhere, staying closer to home, all of the above.
That's right, and the three majors don't want us to have those alternatives, and they do everything. Every lobbying dollar that they spend is to limit our alternatives and free competition. So I read this last week, Tom. I got all angry. So when I get angry, what do? I write an article.
Well, hey, listen, so let's talk about gold for a second.
Sure,
so,
absolutely.
Folks, this is pretty cool what's going on here. Now, check this out. So India is the second largest user of gold. They don't have gold mines there, okay, but they're the second largest user of it. And that only happened, they were the first up until only about a year and a half ago, and China overtook them, right? Well, did you see what's going on in India, folks, is that their rupee is getting to lows that basically is destroying their economy. And India always has a problem with their economy. I mean, India was supposed to be off the lows like 20 or 30 years ago. I've just seen this so many times. But did you see what their prime minister is suggesting?
No, I didn't see that.
So check this out, folks. This is pretty amazing. What he wants to put together is that he figures that in between all the temples and the amount of gold that's stashed, which there's no doubt, to them, that's real wealth, and it is real wealth. They're smart. That's the real bottom line, because they've gone through so many politicians over the years. That's insane.
Right, and their currency goes down, the price of gold goes up.
Yeah,
so in their local currency.
And so what he's suggesting is that he wants to get a system going that they would basically turn their gold in, and he'd basically give them cash interest, okay? And so this is a scam, folks. I'll walk you through this just so you can see how it shakes out. There's people actually that are writing about this, and they think that would put more demand in the gold market. The bottom line, folks, if that ever happened, gold would crash, okay? And this is why. Banks would love to get their hands on more gold to sell into the marketplace to destroy the texture of it.
Yes.
And that's the underlying deal that he's trying to actually get away with. And I haven't read one article yet, but I'm telling you.
There's no way, in my opinion, my humble opinion, there's no way that the Indian populace, who are gold bugs for thousands of years, who use gold as dowries during wedding season, gold and silver, there's no way they are selling their gold to the government. If anything, this will make them buy more gold and hide it.
Right. Well, actually, the way it was supposed to shake out is this. He is suggesting that you don't have to sell it, that you're going to lease it to the government, and they'll give you cash payments, okay?
Right.
But I agree. There's no way they're going to do it, folks, because they're too smart, number one.
It's their security. It's their security.
Yeah, and what you know what the government's going to do? What the government's going to do is give it to the banks to sell it into the market, to crash the market, but that way they get the cash. That's
right. It's ridiculous. It's ridiculous.
Is ridiculous.
Plus, a lot of Indian women wear a lot of gold. What are they going to? What are they going to lend the gold that they're wearing?
That's what he wants.
Doesn't make sense. Doesn't make sense.
And this is what's. And they're saying they want to melt it. He wants to melt it for bars, but bottom line
he wants to melt it into 400-ounce bars so he could lend it on the in the London gold market or sell it. Right.
I suspect J.P. Morgan's probably behind it. Hey, your buddy Jamie Dimon's behind it probably.
Yeah, my buddy, Diamond in the Rough. That was another one. Jamie Dimon, Diamond in the Rough.
Oh, man.
No, it's all very interesting. Commodities make the world go round, and today we're having a little bit of an up day.
Let's talk the dollar. The dollar's toast, man.
The dollar. Well, I took profits in the technical commodity report on the dollar. I threw in the towel.
Thank God.
We made 142%, but Tom, I can't get too bearish on the dollar. The other great
That's all
article.
right. I'll get bearish for you.
Okay, the other article I wrote this week was on Europe and the Greeks, and I gotta tell you, this is a mess. June 30th, big day. The Greeks owe the IMF, the ECB, the EU, they owe them about €1.5 billion. All right, and in July they owe them €4 billion. The Greeks don't have the money to pay. This is coming to a head. This is going to come to a head, and this is going to hurt the euro. So, this is why I think the dollar here has become a trading sardine. You have to buy it on down days and sell it on up days. I think we've gone from a huge rally, a 27% rally between May last year and March this year, to a market that's going to move 2 or 3 big figures, in very short periods of time, but at the end of the day is going to go nowhere fast. Can I see it go down to 92 or 90 on a spike down? Possibly. But I think that the situation in Europe is ultimately supportive for the greenback.
Listen, it's a good argument. I can see that. The way I'm looking at it, the Greeks aren't going to pay the money back. They're going to sit there, drink some ouzo, have a good time, and basically tell the Germans to go take a hike, man. Because the bottom line is that all of this money has been for anyways to pay the bank's interest. So it's like, who cares?
Right, absolutely. But the problem is, and the reason why the Germans can't take that answer and give them concessions is because the minute they do that, the door's going to knock. It's going to be Spain. It's going to be Portugal. It's going to be Italy. We want the same deal as the Greeks, and they can't afford to do it because it sets a horrible precedent. So Europe is between a rock and a hard place here. And all the while, the economy continues to suffer, Tom, because the boats of immigration coming on a daily basis to Southern Europe, which is also making these governments that have these huge austerity programs even weaker. It's a really tough situation over there.
Right. And, we've talked about this before, though. Europe has been toast since the 1980s. I mean, time just keeps going. Do you know what I'm saying?
Right. Oh, absolutely.
Absolutely.
But their currency, I just can't see the euro screaming. And for the dollar to really go down, the euro's got to scream.
Well, see, the way I see this playing out is that they'll tell them to go take a hike, but yet they know they can't take a hike. So they're going to basically give them money. They're going to do something to give them money to keep them in there, but they're not going to pay their money back.
You know what they're going to do? They're going to kick the can down the road.
Yeah.
June 30th's going to come. They're going to make it July 30th, October 30th.
That's what they're going to do. Of 2025.
Whatever. They could do it month by month. They could do it year by year. They're going to have to do it. There's no answer to this. There's no answer that satisfies both parties. They cannot come to a compromise. That's the bottom line. And and what Europe wants to do here is they got to wait out this government, and hopefully another government gets elected that'll cooperate.
Yeah, but I doubt. Why would the citizens vote for another government to say they want to pay it back when they've already got away with it?
Elections in Europe are crazy. Yeah,
no crazy than around here.
This is true.
Hey, listen, man. You stay. We appreciate all the great feedback. We look forward to the show in 15 minutes.
Excellent. I'll be with you soon.
Awesome. Stay right there, folks. Coming right back.
Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. And folks, don't forget, at TFNN, we do 10 hours of live programming every trading day. 8 o'clock in the morning, we kick it off. John Logan kicks it off. Get Larry Pesavento 9 to 10. I'm 10 to 11. We get our man, Mr. Basil Chapman, 11 to 12. We have Daryl Martin at 12 to 1. Think or Swim, 12 to 1. Our man, Mr. Steve Rhodes, 1 to 2. Dave White, 2 to 3. And I'm back here, 3 to 5. Our man, Mr. Andy Heck, is 5 to 6. Get all that programming right on your cell phone at tfnn.mobi. If you'd like to test drive either my daily newsletter, Market Insights, or the Gold Report, you can do that by coming over to our website at TFNN. You'll see on the very top, we'll say newsletters. If you'd like to test drive the daily newsletter, go to Trading Newsletters. You can test drive Market Insights 2 weeks absolutely free. If you'd like to test drive the Gold Report, you can do that. Go to Investment Newsletters. You can test drive that for a month. Bottom line, you can test drive both of them simultaneously if that's what you'd like. So, market-wise out here, what we had out here today, folks, is that we had higher volume on the way down. The volume, we did 718 million versus 698. Now, this is really subtle. I mean, this is when it's always dangerous, folks. On the NASDAQ, we had 1.7 versus 1.5. Bottom line, what that sets up a run to the bottom of this consolidation that we're in right now. And the composite, if you're looking at the composite, NASDAQ composite, we're at 5,013. That's 4,842. That's where that wants to run down into. If we look at the Dow Industrials, you're taking a look at the Dow. The Dow is already deep inside its consolidation right now. Bottom line is that what you have with the Dow, we're at 17,764. This 17,067, so that's $700 down. Now, what would happen with the Dow is that if it gets down to that level, that already brings it into the lower, a second lower consolidation, and that's when the Dow would actually go after the October 15th swing area. The top of the swing area is 1,100 points down. And when we talked about the transports are only $120 away from that. Some of the transportation stocks are already into it. And, of course, that level, by the way, is 20% down in many of these equities. We go take a look at the, so that's on your, let's go to the small caps. Because the small caps thus far, folks, have held up and have held up pretty good. That being said, what you have is that when the small caps move, they move in an extraordinary rate. And the small caps, what the small caps haven't done yet is test their highs. The high in the small caps and the actual Russell will bring the Russell actually up. The Russell is trading at 1249. The high is 1278. Now, it hasn't been able to get up to that level. It certainly hasn't come off that level also. So we'll see if, in fact, it's going to make a run for the top of that level. You know, and it looks to me like, yeah, it will. And that's where we have a little divergence because S&Ps want to pull back, Dow wants to pull back, NASDAQ wants to pull back. The next one would be the NASDAQ. The NASDAQ thus far is not inside the lower range. If we take a look at the 3Qs, I'll give you a number as to where they have to get inside the lower range. Right now, the 3Qs are trading at 108.01, and it would first have to get into 106. You know, 106, they'd have to get into 106 before they'd want to run down into that high volume swing low of 99.62. But all of these numbers are, you know, a long way down. On the 3Qs, you're talking about 90, so that you're talking about 18 points down where that high volume swing low is from October. When you look at this, when you actually look at the chart and you look at this high volume swing low, you wouldn't even have to be a technical person to understand, like, what the heck is that down there? It's like a huge mountain, folks. On a daily basis, we did 108 million shares there at the bottom. That baby wants to get tested. The high of that is 92. The bottom is 90. You know, we've already broken the trend line. You know, the trend line that we would take off that. There she is. I'll do it right now. So the trend line off this low, you can see that it's already broken, and it's broken with conviction. You know, we broke the trend line from that level on the 5th. And we broke it with volume, by the way. The 4th. We broke it with volume. So we got through the channel line. So it would be a channel going from the October 15th low, going all the way up to the high. Bottom line, sliced it, diced it, did all the above. When you do that, bottom line, yeah, you can go back up and test the top part of the channel. But other than that, you want to, the longer range take is that it's going to go down into the bottom of that channel where it started from, and what is, you know, and at that particular point, we'll see, okay, does it have volume as it gets into that level? Time-wise, what we have out here is that this market has set up, it's already rolled. You're coming into July, you know, until July 4th, you basically, you know, I suspect the next couple weeks you can come down a bit. You'll probably rally into the 4th. Market loves rally into the 4th. Right after the 4th, though, and the 4th this year is on a sad day. You know, so what you're going to see is that we're going to be off Monday. It'll be the following week. It'll be like July 8th, 9th. That week there, you can expect some heavy pressure in the marketplace. And I know I'm pushing that date out. Like, okay, you know, what is that all about? Well, what that's all about, folks, is that the way this market is traded right now, I can expect it to come to the bottom of the first consolidation. So that'll come down another 5 to 7%. You'll get some kind of a boost up, artificial boost up going into July 4th. And that boost up is setting up the B to C of an ABC structure on the way down. Second, third week of July can be problematic. I expect it will be problematic. And what that sets up, you got to remember, July, August is dead as a doornail. September is a vicious month. October, you normally make lows in October and you're coming back out the other side. So the real question is that time frame there set up in the marketplace for basically large operators to figure out, okay, where are we? What are we going to do? What's the Fed going to do? And how is the Fed positions actually going to help us and or hurt us? I suspect that the market itself is going to bring the rates up, not the Fed, because what you're going to see, as soon as we come down 5%, the Fed is not going to touch those interest rates, okay? They're so paranoid they can't see straight anyway. Though, you know, bottom line is that that's how this seems to be setting up. You stay right there. Our man, Mr. Andy Heck, is going to be coming up. Great guest for the whole hour. Going to really get you acclimated into the corn, soybeans, wheat, ETF structures, and bottom line, those grains look like they're off the bottom. And always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take
Tiger TV is an